Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. I'm going to be having a look at which way the Bitcoin market is going. I'm going to be having a look at a particular chart pattern, and if that breaks out, that may well be the catalyst for the end of the current bull market. So we'll have a look at the pros and cons of exactly what's going on and what the levels are going to be once this chart breaks out. And as per usual, we'll have a rundown on the various time frames for Bitcoin, as well as look at the 60-day cycles to give us some sort of an idea of the short term, the medium term, and the longer term. So if that sounds interesting, you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder. Please remember, everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, so the big question that everybody's asking at the moment is, which way is the market going to go? Have we actually topped out at 126,000 and are we in a bear market, or are we going to have a continuation here for a further leg, an extension to the 4-year cycle? So we'll have a look at some of the pros and cons, and then everybody can make up their own mind which way this is going to go. And all I can do is to give you an honest and objective analysis. Nobody has a crystal ball. Nobody knows for sure exactly where this is going. But with a little bit of analysis, with a little bit of objectivity, you can make a decision based on an unbalanced view. Because what you have in any market at the beginning and at the end of a bull market is that in the previous bear market, when you get to the end, everybody at this point thinks that this is going to go lower. But there are certain things that happen here which give you a balanced view of either way, which way it can go. But there is a leaning that tells you that this is going to go back up again. And then once you're in this trend, then you can be bullish right up to the end of the 4-year cycle. And then you're faced with another confused paralysis state where you really don't know which way it's going to go, because at this point, you're in the time band for the beginning of the bear market. Just like here, when we actually jumped on board right at the bottom, around 15.5 to 17,000, because this was a time band for the end of the bear market and the start of a new bull market. And the reason why everybody is confused, from here to this point, we're in a bull market and we can continue to be in an uptrend. So all the analysis is based on a bull market uptrend until you get to the ends here, because here you start getting mixed signals for both the bull market to continue and a bear market to start. And before I have a look at the pattern that I want everybody to be aware of, is something that I mentioned in the last couple of videos. So if you've been watching my programs, you'll know that we had a set of Brexit indicators, which were a number of indicators that were going to give us some sort of a signal, which have given us the signal in the past of the last 3 cycles. And as long as the Bitcoin cycle was going to be a normal 4-year cycle, then we should be getting a trigger of those signals, those indicators, around about the time period that we're in now, which is at the end of the bull market phase of the 4-year cycle. And we've all been waiting for these triggers to start happening. And because we haven't had the normal, usual blow off top that you would normally get like this in the previous cycle, then those indicators have not been triggered. So we have to use something different to give us some sort of an idea, a signal that we've come to the end of the bull market here. So if I give you an example of the pi cycle, this was one of our indicators, just like over here. When they crossed over, that was the sign of the end of the bull market. And as you can see, if you go back to the previous cycle in 2017, again, the green line crossed the red line, and that gave you the top there. So this was what was expected, but obviously this hasn't happened. Not yet anyway. So it's clear that the red line of the pi cycle and the green line are too far apart for this to be happening in the time band that we're in. So the question is, do we have an extended cycle into January, February, March, April, where this indicator has an opportunity to get back up here and cross over and come to the end? Or the alternative is that we have come to the end of the bull market and this cycle has just played out differently to the previous cycles, because this time around we were joined in by the institutions and the retail didn't really take part. So the whole characteristic of the 4-year cycle has actually changed from the underlying point of view. So now that we know that the Brexit indicators are not ready to be triggered off, we have to use a different signal. And the one other signal that's really left, which is a main signal, is the 8 EMA. And that is that whenever we fall below this 8 EMA on a monthly basis in the time period of the end of the bull market, that usually spells the beginning of the bear market. The only downfall with this particular indicator is that it's on the monthly time frame, and by the time it actually closes below the ATMA like it did here, that was back in March 2018, when the market had actually already topped out in December 2018. So this indicator actually triggered off 3 months after. And this is the issue that people have. When we're at this point, everybody's thinking that we're going to go higher. So when we're at this point, like in the last cycle, everybody thinks it's going to go higher. But you only know the top once we fall below the top itself. So this is where this particular indicator comes out. And you can see that once we fell below that ATMA, the beginning of the bear market confirmation. And similarly here, when the market had topped out in November 2021, it was December, 1 month later, that the market had given a signal that we're now going to be going to the lower side. And those people who are holding volatile stocks like the altcoins or the Bitcoin miners, then you have the added problem that when the Bitcoin price comes down, those volatile stocks come down much faster, much harder, even before the signal is actually triggered. The added problem is that by the time the 8 EMA is triggered, i.e. a close below the ATMA on the monthly time frame, which is here, from the top at 69,000, when the candle closed at the ATMA, this was already down just over 30%. But what it does do is give you a very strong, high probability trigger that we've come to the end of the bull market. So from that point, if you'd have got out at around the 46,000, you could have avoided to the bottom of the market another 66% from that point. And as everybody knows, it's virtually impossible, unless it happens by accident, that you can't really get out at exactly the top and you can't really get in at exactly the bottom. If you can get in around about here and get out around about here, then you'll have avoided this amount down here and made this amount of profit here. So what you're trying to do is to capture the majority of the move in the bull market and the bear market. So here we are now. What is happening at this point? We're getting mixed signals. My job is to just present an honest and objective analysis, and I want to show you a particular chart. The reason why I'm putting everything into context is for the pattern that I'm going to show you here, which occurred at this point, and it also occurred in the previous cycles as well. And this pattern is the #1 classical charting pattern in terms of its higher probability play. So we're talking about around about between 70, maybe 75%. So going back to 2021, what we were forming was this head and shoulders pattern here. So what we have here is a left shoulder, a head, and a right shoulder. Once we broke that, multiple attempts to get back above this resistance line, which was support previously, but eventually it broke here. So this was the pattern that was happening back in 2021. You can see that once this broke, what we had was the confirmation of the bear market going all the way down to 15,400. If you go back to 2017, once again, this wasn't a symmetrical head and shoulders, but what you did get was a neckline that developed with a similar head and shoulders pattern. That is that you got this left shoulder, head, and then you got an extended right shoulder here. And once it broke, came back up to retest that old support as resistance, and then it broke to the downside. So if we zoom out, this was the trigger that led to the fall all the way down to 3,100, 2018. And going back to 2013, we had a similar pattern. It's not what you would call a classic head and shoulders, but once again, we had a neckline here that once it reached the top, we had a very similar neckline, as you can see, at this point. And in many ways, it does resemble the left shoulder, the head, and the right shoulder breaking down at this point. But you can see that it did actually make an attempt to get above it and come and retest exactly the top of that right shoulder with this candle. So in this particular cycle, you did get a curveball of a retest of the top of the right shoulder rather than the top of the neckline here. But once again, we did get this head and shoulders pattern topping out at the top of the bull market. So if we now come to what the current price is, we're getting a similar type of pattern here. And the reason why this is important is because we're right in the time band of the end of the 4-year cycle as we know it from the historical perspective. And people talking about the extended cycle into the first quarter or second quarter of 2026, I would remind people that we have no data point of that occurring. This is just hope value at the moment. Of course it can occur, nobody's going to take that off the table, but we have no history of it. The only history we have is of 3 previous cycles ending after 4 years. And we're now right in the end of that period of the bull market phase of that 4 years. So we have to go by what we have. And that is that currently, if you look at the actual patterns developing here, if you put this neckline here at 107,000, then what you've got is an extended shoulder to the left here, or you can just count this one as the shoulder. And then you had the head where the top was at 126,000. And then since then, we've now got the right shoulder completed. And we're right on the cusp of breaking out. It can, of course, create another shoulder here. But as you'll see from the 60-day cycles, the analysis that I've been presenting, especially in the last 2 cycles where we've had 2 failed 60-day cycles, this is playing out exactly as you would expect the characteristics of a failed cycle. So this is the pattern, and the measure of where this would go down to would be to take it from the top of the head to the bottom. That would be a 15% move down from where we are currently at the neckline. That's one way of measuring it, that from the 107,000, the 15% would take you down to around about 91 to 92,000. And that would actually make sense. And you may use other methods. And if it works for you, just use your own method. I'm just sharing what method I use, which I find accurate for myself. So if the price goes down to around about the 90, 91, 92,000, which is what this is predicting, then if you look at the 8 EMA on the monthly time frame, we can see that the blue line, the 8 EMA here, is at 105,000. So if we break below the 8 EMA to come back to this particular line here, this support and resistance of the past at around about 91, 92 is quite clearly below the 8 EMA. And if we get to those prices at the end of November, that's telling you that we have actually topped out at 126,000, and then the close below the 8 EMA will confirm it. And this is why many people would think that you've got a decision to make before you get to the 92,000. And there are 2 levels that I've been speaking about to the private members, which will determine whether we're still in a bull market or we're going to break into a bear market. So what we're going to do now is to run down on the various time frames to make head or tail about which direction the Bitcoin market is going. Okay, if we start off with the monthly time frame, what we've got is we had a candle close, the October monthly candle closed here. Now, if this candle had closed at this point, I would say with higher probability that this is going to bring the price down to much lower levels, simply because this happens to be the 4th candle at the top of the trend. So what we've really got here is a consolidation within a range, and within that range what we've got is a shooting star bearish candle. So some power of that has been invalidated by the fact that we're in a consolidation zone rather than coming up right into resistance for the first time and then creating this shooting star pattern. But we can't ignore the fact that it is a bearish candle, and it does have the power still to bring the price down. Because if you look left here, when we actually came up, we got a similar candle at the top of a trend at this point. And because this was the first candle at the top of the trend, this brought this down all the way down to 74,000. But this time around, it's the 4th candle of a consolidation around here. So the bearishness of it is negated or invalidated to some extent, but we can't ignore it that it can still bring the price down. And if you look on the RSI, you've actually got a mixed signal here. So while we do have a bearish divergence, i.e. the price has made a higher high on the Bitcoin price, and on the RSI we've made a lower high. But if you look on the underside, we do have a higher low on the price, but actually a flat or a lower low on the RSI, which means that there's a hidden bullish divergence. We got one here, which happened at that point, and then we've run up to that 126, having been triggered by this signal here. So currently, we do have a hidden bullish divergence. So while this is looking bearish at this point, there is still that chance that Bitcoin can do this. But as days are going by, and as we're getting deeper and deeper into the time band of where we would expect the top of the market, this scenario seems to be getting less and less. Okay, moving on to the weekly time frame, I just want to start by saying that as long as we remain above the white line, which is the 50 simple moving average, then as you can see, the trend should continue according to that. However, but many factors are leading to the conclusion that we're more than likely going to break below it. But as long as we don't break below it, we are still in an uptrend from a technical point of view. However, the danger signs are here. So let me just give you a close-up of this particular area here, and then you can make up your own mind where this is going to go. So what we've had is the 8 EMA, the blue line, has crossed below the yellow line, which is the 21 simple moving average. So you can see that there is weakness now setting into this trend, and this is one of the reasons why we haven't gone back up to the 126, because the trend here has been weakening, which has brought the exponential moving average, the dynamic one, the blue line, which is moving much faster, it seems to have now leveled off. So while it was rising up here, in the last many months now here, you can see quite clearly, because we've been going sideways, the blue line has actually flattened out and now falling below the 21 simple moving average. So while we're still in an uptrend on the weekly time frame, there is clearly a weakening trend in the price. Okay, so I'm going to go on to the daily time frame and look at this particular chart through the eyes of the 60-day cycle. So what's happening here is that this particular cycle, which began here on the 25th of September, and I'm quite well aware that some other people on YouTube may have started the cycle at a different time, and it all depends on your count. My count is this, and we'll see how it works out. But this particular cycle from here, from the 25th of September to where it's supposed to end around the 24th of November, seems to be replicating what we've already had in the previous 60-day cycles, because if you go by the actual pattern, you'll see that at the beginning of the last cycle, we got a very quick run up here, all the way up to about 124,000, and then we had an early mid-cycle decline into the midpoint here, even though we'd bottomed out a little bit earlier and then went into that midpoint on a high. And this is exactly what's happened in the current cycle. Once again, we had an explosive move from down here at around about 107,000 all the way up to the 126, and then had an early mid-cycle decline, and once again from the bottom we went into the midpoint on a high, and this high here went all the way up to this point. And if you've been watching my videos, you'll know that I gave you some targets at this point, and the reason why I gave you the targets was because when we got to this top, this particular bottom at this point was a confirmation of a failed cycle, because we'd gone below the previous start of the cycle and ended multiple candles below the actual neckline, i.e. the start of the cycle. So because we had the failed cycle, the characteristic of failed cycle is that you don't go and make a retest of the previous high. So as I said at the time, the higher probability is that this is going to get rejected either at the 38.2 or the 50% or the 61.8. So those were the three targets I gave you for this level before we went to the end of that cycle. So if you look at the Fibonacci levels, our final level was this one here at 118,000, and this is exactly where it got rejected into the end of that cycle. So we've started that new cycle and we seem to be just playing out exactly the same way. And that is that we've once again got a failed cycle here. We've ended up multiple candles, just like we did over here, below the start of the cycle. That told us that we're not going to get a retest of the 126. And since then I've given you these three targets here. And so far, the first one was the 111, and this candle came up to the 111 and got rejected, and then you can see the next candle came all the way up to the second target at 114,000, and once again it got rejected. And recently we made our third attempt, this time to the 61.8. It didn't quite get there to the 117. We got 116,400, and we've now got rejected one more time there. So in terms of the count from the start of the cycle, today on Monday the 3rd of November, we're on 39 bars. That's 39 days. So we've got essentially about 21 days to get into the end of the cycle here. And in the member section, I did mention this particular candle, that we've got a gravestone doji candle or a shooting star, whatever you want to call it, which is going to bear down on the price. So we were going to get rejected with an expected lower price here. And we've come and retested that 106 one more time. And as I've shown you with the head and shoulders pattern, this now has a very high danger of breaking out. But before then, you may well get a counter trend rally trying to re-establish these levels one more time. So there is still this possibility of coming back up to the 111, possibly the 114. This time around, I wouldn't expect it to go above the 116, because as you can see, we're making the lower highs, and I would expect another lower high on a counter trend rally here. And this is where you would expect the rundown into the end of the cycle, and this is where between where we are now in the next 3 weeks, I would expect with a higher probability. And please remember, these are all about probabilities. There can never be certainties or guarantees. The markets don't work like that. And unfortunately, people who are looking for 100% guarantees and certainties, they don't last very long in this market because they get disappointed. And that's all because they're setting themselves up for that disappointment when they expect something to be very definitive in terms of a guarantee or a certainty that this is definitely going to go up. The people who survive this market are the ones who know this is a probabilities-based market. So while the charts and everything else around it are giving you a high probability that this is going to break down either at this point or it's going to have a counter trend rally into a dead cat bounce below the previous high to create the lower high, then the next probability is going to be at this point is more than likely, i.e. a higher probability is going to fall below that 1/6 neckline. And that should really confirm if we get to the end of November and the price is below the 105,000 price, because it'll take it below the 8 EMA. So we're really heading at the moment, I would say, on a basis of 60-40 into a bear market. And I know that the majority of the YouTubers out there are giving a very bullish picture, and they may well be right. I'm always very happy to accept an alternative viewpoint. As I said, a 60-40 is what I'm thinking, which basically means that 40% we could still go back into a bull market. But the 60%, the leaning is more towards the bear market. Considering where we're at this point of the bull market and the time band of the end of the bull market, we wouldn't be expecting failed cycles like this. Failed cycles only come when the market is heading for a bear market. And everybody can make up their own mind. And this is why the two levels that we've got in the private member section is the 106,000 and a close above the 117,000. So any close above 117,000 should tell us that this failed cycle has played itself out and the market wants to do something completely different. So this is where at 117,000 I know that the whole thing has changed and that we're more than likely now going to go and retest the 126 and break above that for a continuation of the bull market. But until that happens, my leaning is now towards the downside. And as I said many times before, nobody has a crystal ball. Nobody can see what the future is. We're looking at the market in an objective and honest way and giving you the information, and everybody can make up their own mind. Okay, those of you who've been following our portfolios, which we cover in the private section of this channel, and we made some major decisions on that portfolio on the 22nd of October. And currently the portfolio is running at 1.06 million. So we started off with 100,000 back in 2023, and that's now reached a 10x to 1.06 million. And once we can confirm that we're in a bear market, then I will have a portfolio for the rest of the bear market as well. So this was the portfolio that we had for the bull market. We had these choices here, and obviously we had a trading portfolio as well, which so far is up to 772,453. So that's a 7x compared to the passive portfolio, which is 10x. But for the majority of the bull market, the trading portfolio was much ahead. So what we are planning on having is similarly for the bear market, a portfolio to take us to the end of the next bear market. And then we'll be switching back to the bullish portfolio at the end of that bear market and the start of a new bull market. And if you're interested in joining us in the private member section, where we cover both Bitcoin and the Bitcoin miners, there are two specific videos that we do in the private member section. That's on the Wednesday and the Saturday. And on the daily basis, we have a market update at the end of the market closing, Monday to Friday. And at this stage of the bull market, it is absolutely key to have as much information as possible. So as you'll see that we had these market updates, we also do personal development in terms of helping our mindset for trading and investment purposes. And you see all these charts giving you insights of what is about to happen. And if you want to join us with all that information, with the two videos as well as the market updates on a daily basis, all you have to do is go below any of my videos. There's a join button here below the video, as well as in the description box. You've got the miners membership join link. When you click on that, for the price of one coffee per week to £12.99 per month. And please remember, you can cancel at any time. There's no obligation or any contracts or anything like that. And some people join just for 1 month just to have a look. And if they're not happy, then they just leave. And at the moment, we do have full membership. However, because we're in a critical stage of the bull market, I have now opened up another 25 spaces to allow more subscribers to join the private membership. Okay, so I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like like and subscribe if you haven't already done so. And if you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.